Outside of tech, the strongest demand environment right now is aerospace and defense. That, according to our next guest, who will tell us more on his expectations for the market for this year. We're joined by Jed Ellerbroek, portfolio manager at Argent Capital Management. Thank you, Jed, for joining us.
Hey, good morning.
Let's talk about just overview for what you're expecting for 2026. What are you seeing?
Yeah, I think your lead-in comment was right. So obviously, AI infrastructure demand is exceptionally strong. That's what's driving the U.S. stock, the U.S. Economy, North American economy. But another exceptional area of demand is aerospace and defense in both parts, including aerospace, commercial aircraft, both new deliveries as Boeing ramps up. Also, the commercial aftermarket is very strong as airlines have run those planes really hard the last few years and ran them longer, more years than they typically do. So the average fleet age has grown, which requires more repairs, more aftermarket activity. And then the other side of it, defense, demand is exceptionally strong too. The U.S. defense budget is growing at a double-digit rate. I expect it will continue to grow. The U.S. military has been a little bit more active here, over the last year overseas, and so both aerospace and defense demand are exceptionally strong. TransDigm is our favorite in that area. We also like HEICO, which is a bit smaller company. Both those companies are growing, double digits today, and we expect they'll complete acquisitions to enhance that growth as well.
And what are you liking about TransDigm?
Yeah, TransDigm, new CEO, promoted internally through the company. This is, the prior CEO led the company for about 10 years, did an exceptionally good job. He came from Precision Castparts, which is owned by Berkshire Hathaway. I think it's a very well-managed company, very well-managed succession. I think the new guy is going to do a nice job. He did his first sizable acquisition about a week ago. Good to see that the company still has M&A options available, even though they're much bigger now than they were several years ago. So I just like that combination of organic growth as demand grows from their customer base, enhanced by acquisitions, and any money that's left over is typically returned to shareholders via special dividends in the fall or winter. We saw one of those 3 or 4 months ago. And
what kind of a return was it?
I believe it was 4 or 5% of the market cap.
So a nice number there. And they really have their I want to say their fingers in everything, but most companies need them, don't they?
Yeah. So TransDigm's value proposition is they try to acquire and they try to grow product lines where they are either the sole source or just two sources of that product. Oftentimes those products are spec'd into the FAA requirements for those aircraft or helicopters. And so, recurring demand, limited competition, that enables pricing power for TransDigm year after year to increase their revenues and profits.
And forgive me, what was the second company you mentioned that you're liking right now?
Yeah, HEICO, ticker HEI.
HEICO, and what about that? What do you like about that one?
Yeah. Similar story. The little twist with HEICO is they have a PMA business, which is like a kind of like the generic food option for the aerospace industry. They offer alternative, cheaper parts for certain aircraft repairs, and that business is growing well because airlines are price sensitive.
Okay, and then let's just go into the one that everybody's talked about, AI and hyperscalers. Let's get your thoughts on that. Where are you standing with that?
Yeah, exceptional demand growth year over year for accelerated compute in data centers. NVIDIA, of course, is a really large beneficiary of that, but that trade broadened out really dramatically over 2025, I think. The memory component companies, have done exceptionally well lately. Micron is one of the bigger ones there. SanDisk is another. We've also seen Broadcom and Marvell, who are kind of custom chip developers, doing well, supplying chips to companies like Amazon and Microsoft, Google, that want to develop their own in-house option that's a little bit cheaper. And then also the semi-cap equipment companies. Applied Materials is one that we own in ticker ABIG, which is our ETF. Applied Materials makes the equipment that's used to fabricate semiconductors in TSMC's plants over in Taiwan and other places around the globe. So the trade has really broadened out this year. I think this is a rising tide lifts nearly all boats situation. And I think all those companies will continue to grow rapidly in the coming years.
And no concern about CapEx right now?
Yeah, two big investor concerns are, number one, how are customers going to finance the purchase of all this equipment going in data centers? And then number two, is customer demand actually going to arrive? Are these new use cases going to actually enter the real world? Is robotics going to proliferate across supply chains? And I think the answer to both is yes, those hurdles will be overcome. I think capital markets remain fairly friendly to AI data center construction, and customer demand is there. And we are going to see all that affirmed, I think, this first quarter earnings season in 2 or 3 weeks. We're going to see the big hyperscalers, Google, Microsoft, Amazon, Meta. They're going to tell us demand is exceptionally strong for these new AI tools. The compute capacity is put to work immediately when it's turned on in a new data center, and they're going to build more.
Okay, and I just want to sneak in one last question about the alternative asset managers. Some people like to shy away from it, but you're not one of them.
Yeah. Well, first of all, those stocks are down this morning. There have been a couple banking downgrades here over the last couple days. So I think this is a buying opportunity in those businesses. We own Blackstone and Apollo and Hamilton Lane, as well as Carlyle. We think the whole space is attractive today. It's growing because capital markets, like I said, are friendly. GDP growth is strong. Interest rates are coming down. M&A activity is rising. IPO activity is rising. So this is really a very favorable environment for these alternative investment managers. We think fundraising will be strong. I think investment returns are going to be strong, and markets are supportive.
Okay, we'll wrap it up there, Jed. Thank you for joining us.
Have a great day.
Jed Ellerbroek is portfolio manager at Argent Capital Management.